Hello, traders. Cousin Benny coming to you from theclosingprint.com, September 10th, 2023. In this weekend's video, we'll discuss the indices, all of which are flashing neutral signals. We have 6 bearish indicators, 9 neutral, and only 5 bullish to start the week. The S&P 500 appears to be printing out a head and shoulders top. We're about 2% off of the recent high and 3.4% off the late July reversal. That said, RSI did turn up on Friday. While we did see selling, and stochastics and MACD are both giving us cautionary signals to start the week. In addition, the New York FANG index is trying to hold on to the 50-day moving average. RSI is turning back up, and we're looking at MACD and stochastics in the same situation as the S&P. Overbought, looks like it's turning, giving us a reason to be cautious. If we hold on to the 50-day, then we'll reassess on Monday and let you know via the live broadcast. Small caps are holding on to this breakout level that started back in May. Looks like a little head and shoulders top here as well. 200-day is right at 182, so we need to stay above that level, else we could pull back a bit more, with stochastics and MACD giving us cautionary signals here as well. We're looking for reasons to be bullish, but frankly, it's a time to be more cautionary given the seasonality of this time of year, which reminds us to be more defensive in August and September, which is reflected in data during this period between August 16th and September 30th. We tend to see more of a negative return, yet another reason to be more cautious. While most of our indicators are bearish or neutral, we do have a bullish follow through in NIMO. That black line continues to climb. We're looking for this extreme to lead to higher prices. For now, though, we still have red elder sticks on the New York Stock Exchange and need to be patient in the short term. In addition, advanced decline percent is giving us the same signals, so look for these to turn back up. We've pulled back below the zero line, except for the NASDAQ in the lower panel. We do have conflicting signals from VIX. It's just telling us that volatility is low and traders aren't adding security or playing defense at the present time, with green indicating we should look for higher highs and higher lows. Starting off the week, we look for the 10-year yield to back off a bit. It's still playing around with this October high, but printed a lower high last week, so we'd like to see this back down towards the 50-day, while at the same time looking for junk bonds and high-yield corporate debt to continue this bullish trend and not drop below and head towards the 200-day. If the latter were to occur, that would be a bearish signal on a loss of the 50-day anytime in the next couple of weeks. We also like to see the U.S. dollar back off a bit. This is in a bullish trend. That's a headwind for U.S. equities. In addition to bearish signals from copper, which dropped back below its 21-day moving average, an early sign that the economy might be slowing. The precious metals like gold and silver remain in a sideways range, so there's nothing really much to do here in terms of a safety trade. While the dollar moves higher, it's unusual to see Brent crude continue, but there is strength in the crude market, so keep an eye on energy-related names as the Biden administration signaling that they continue to block new leases and drilling in Alaska. That's going to affect the oil prices, which should continue to produce a headwind for equities and provide a tailwind for Brent and West Texas crude. Finally, there's gasoline, and if you've noticed at the pump lately, gasoline has dropped a few pennies, at least on the East Coast. We remain in a sideways range, while the weekly chart shows that we haven't changed much since August of last year. Most sectors pulled back last week, with the exception of energy and the oil and gas equipment services group. with consumer staples still underperforming consumer discretionary, which produces a more bullish longer-term picture at the present time. You can see when we peaked in 2022, despite the negative news and the slowing economy, while institutions continue to position more bullishly in the intermediate and long term. Short term, we have seasonality to deal with, so we'll be cautionary to start the week. Stocks in the IBD 50 listed below, with stocks showing relative strength also listed, which have an opportunity to follow through, mainly in the energy, some financial, tech, and travel and leisure group that look like they could follow through this week. For example, Arch Capital in the financial group looks good. MACD and stochastics rising, price above the 50-day. 50-day has a nice slope to the upside. Looking for RSI to follow through this week. Apollo Global Management, a private equity firm, also looking pretty strong. RSI is above 50, turned up. Prices following the 9 and 21 day. Volume showing institutions have been buying. MACD is above its signal line, stochastics embedded. So keep an eye on Apollo Global Management. It broke out above 73, so it's up over 20%. Usually a good time to start thinking about profits, so keep an eye on price action. It needs to stay above the 9 EMA to start the week. Booking Holdings has been somewhat flat, but it's in a sector that is showing relative strength. Travel and leisure has been doing quite well. Stochastics with Booking is turned up, looking for a MACD to turn as well. RSI is above 50. With additional stocks from the group pushing higher, Expedia rising with MACD above its signal line, stochastics trying to turn, RSI is pushing back above 50. With the hotels also seeing some action, Hilton Worldwide Holdings, above average volume on Friday. We noted this right around 10 o'clock. The stock was on a move, and to use a stop underneath the morning low or the 150 area going into this week. We saw a similar price action from Marriott. Look for this range breakout above 210, 211 to signal a follow through after this big base. We broke out, profit taking, consolidation. The next leg, if we do move higher, would signal continuation with stochastics and MACD turning higher. In addition, on July 7th, we alerted you that these stocks were breaking out. Here's July 7th on the breakout, and the stock up over 10 bucks from that point, looking for the next leg going into the fall. Interactive Brokers also doing a great job after this large base formed. We're breaking higher. The depth of this pattern is about 20 points. Look for a follow through on the breakout. In addition, Charles Schwab showing signs of a higher low. Watch for a move above 62 with RSI rising as well. MACD a bit flat and stochastics trying to turn. Raymond James Financials looking pretty strong. Look for a move above the 50-day. Stochastics, MACD turning. Need to see a little bit more volume, but more stocks from this group look like they could follow through. Remember Apollo Global Management I just mentioned a few minutes ago. In addition, there was a lot of chatter last week about Goldman Sachs management, a shakeup. Watching this stock, be very interested to see if it gets above the 200-day. Not really interested in taking a position, but look for a follow-through. Additional big cap tech names like Google from the communication sector, trending, showed signs that it might want to break out sooner rather than later. Amazon and Shopify both come into an agreement using Amazon's fulfillment network and Prime, with Amazon continuing its Thursday-Friday breakout potentially this week, while we look for Shopify to bounce off of this area. Additional big cap stocks, Netflix looking for a follow-through. Microsoft also had a nice pattern developing last week. This might be a trade or a swing going forward. while stocks from the sports betting and sports-related industry groups, DraftKings continues higher, above its 50-day, took out Thursday's high, with RSI rising, volume starting to pick up, stochastics and MACD pointing higher. Finally, there's the stocks listed below. Look for a continuation this week, while maintaining a bit of caution to start on Monday trading. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. It's Sunday, the 10th of September, with your weekend video newsletter. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast. Be sure to check your inbox for that. Otherwise, take care. Have a great weekend, what's left of it, and we'll see you in the morning. Ciao.